What's up, everybody? My name is Hunter, and in this channel, all we do is talk about dividend stocks, passive income, dividend stock investing, all that good stuff. So in this video, what we're going to be talking about is why I chose to become a dividend stock investor, more specifically a dividend growth stock investor. We'll talk about some of my holdings, what my entire goal is, and why I chose this type of investing rather than choosing individual growth stocks or just selecting to invest in the S&P 500, different things like that. We got a lot to go over in this video. So before we go any further, all I said, if you enjoyed the video and you find any value, you make sure to give the video a thumbs up and you subscribe to the channel. You turn on those post notifications for videos coming out every other day. You know how it goes. Thank you for all that good stuff, and leave a comment below as it really helps out the algorithm. Not going to waste your time with this intro. Let's get into the video. So what we're looking at right now is my portfolio on M1 Finance. If you want to get access to this, check out the links in the description or the comments below. It'll say dividend portfolio. It'll take you there. It's 100% free. You can go check it out. You can see that there are 6 different slices to my pie. My tech and cloud computing does take a massive target at 35%. Then banking and fintech, income fund, which is just some high income, high dividend yield ETFs, real estate, consumer and stores, and then restaurants and food. My restaurants and food actually only has one holding, which is Starbucks. We can look just, for example, at tech and cloud computing. This is my biggest sector because I am still a young investor, and I have more of a time horizon than most would usually have. And I probably plan on having my portfolio on dividend reinvestment for at least 10 more years. And so I want to aim for a lower yield, higher growth. And over this 10-year time horizon, I want to get a very nice yield on cost. And in tech companies, for example, like Apple and Microsoft, I believe that the potential is there, and even Nvidia. But Apple and Microsoft are my 2 favorites. But I'm not going to waste your time talking about my holdings. If you want to go check those out, feel free to do that on your own. But let's talk about more specifically why I chose to be a dividend stock investor. Now, the first reason we're talking about is dividend stocks are better in bear and flat markets. Historically proven, they just prove to be better in bear and flat markets. And it's kind of just obvious that they would perform better. Because think about it like this. When the markets are trading down or sideways, as long as your stocks and the companies that you're investing in are solid and stable companies that can sustain their dividends even in crises, things like Dividend Kings, who have been through a bunch of different crises, 1990, 1980s crash, 2008 financial crisis, COVID, different things like that, Great Depressions, and they're still continuing to pay these dividends. Those are the companies you want to be investing in. And if they can continue to do that in these bear times, in these flat markets, you will be receiving that cash flow, which is providing a return, okay? Even if it might be slightly negative, let's just say, for example, the market goes down 10% over a year, but your dividends were 8%, you'd rather be getting a negative 2% return than a negative 10% return. Now, just to add, as inflation is kind of concerning at the current timing, dividend stocks are a good hedge against it. Now, let's look at this little image right here. Total return for the S&P 500 index was negative for the 2000s. It was a lost decade. Dividends provided a 1.8% annualized return over that decade. So, just like I said, these growth stocks, I can't find where I found it, but I remember reading this a few months ago, and it said like if you invested $100 in 1999 just in the S&P 500, by 2010, your $100 would have been worth like $96. But if you would have reinvested, or if you would have just collected dividends, you would have had $118, which is an 18% return. That is the power of dividends. Now, let's talk about the second thing on why I like dividend stocks. Dividend payments and emotions. One of my favorite feelings personally is waking up in the mornings and seeing I got paid dividends that day. For example, like today. Now, I'm not sitting here with like $1 million portfolio. I woke up this morning and I had like an $11 payment. One payment was from XYLD. I don't even remember what the other 2 were. But it was $11 total. $11 isn't like incredible, but it's better than no dollars. And it just feels amazing to know that I literally made that $11 from doing nothing, It's incredible that these companies, these ETFs, investments, these funds, they just pay you. And I love that feeling. And it helps me stay motivated and continue investing and wanting to build more cash flow. And reinvesting those dividends is incredible because you know what? I know that next month when XYLD pays me, or the next quarter when these companies pay me, it's going to be a little bit bigger because I reinvested the money that they gave me beforehand. And talking about the emotions in this is that growth stocks can often get hit big time and hurt investors negatively and stray them away from the markets. Now, what I mean by that is, take for example a stock like PaySafe, which is like $12, and now it's like $3. It literally fell that fast in like a 2-month time period, if even that. So just saying that, I'm not hating on growth stocks. I'll talk about my opinion on those later in the video, so stay for that. But here's just a little image that I liked. $4.12 in dividend isn't very cool, but the day that $4,120 in dividends rolls in, that'll be pretty cool. Keep building. Be patient. Trust the process. Now let's talk about the third reason why I'm a dividend stock investor. The dividend snowball effect and the dividend reinvestment plan, also known as DRIP. Now, dividend investing provides cash flow, and as you take money that is paid to you for being an investor, you're nearly guaranteeing yourself more future income in the future. Now, what I mean by this is you're not necessarily, these companies aren't legally obligated to pay you that dividend. But as long as you're reinvesting these dividends and they pay out the dividend like they're supposed to, and they're a solid company who can't sustain the dividend, you are pretty much guaranteeing yourself more future income. Because let's say, for example, you got paid $50 in dividend income. We reinvest that $50. Next time, you have $50 that they can pay out in your ownership more dividends to you. And as you just keep doing this and you keep reinvesting your dividends and you keep adding more money to your portfolio, that is when things get incredible and your dividend income just explodes, okay? The more and more you invest yourself and you reinvest your dividends, the more your dividend income will be. Now, going back to 1970, 84% of the total return of the S&P 500 can be attributed to reinvested dividends and the power of compounding. Here is a $10,000 investment over a 60-year time period from 1960 to 2020. $10,000 with reinvesting dividends turned into $3.85 million, and if you did not do any dividend reinvestment, it only would have been $627,000. That's a massive difference. That is the dividend snowball effect working its magic. Now let's talk about the fourth reason. Dividend stocks are just historically better. Look at these two images right here. Here is the returns of the S&P 500 index stocks by dividend policy. Dividend growers and initiators had the best returns from 1973 to 2020. Dividend payers had the second best. The S&P 500 had the third best. No change in dividend policy. Just take, for example, a stock with a 1% dividend yield and kind of just kept, or let's just say a $100 stock that paid $1 per share every single year. They paid that $1 per share 1973, 1989, 1999, 2012, any year, you name it, they're $1. They did okay. A little worse than the S&P 500. Dividend non-payers did the worst, and dividend cutters and eliminators did the far worst, had a negative investment return. So just keep that in the back of your mind. And now here's a little hypothetical growth of 1 million from 1928 to 2013. Non-payers did the worst, and then the lowest payers did the second worst. And you can see quintile 2 and 3 from lowest payers to high medium payers did pretty much the same. The highest payers did the second best, and the medium high to medium range did the best returns. So keep that in mind. Here's the average annual total returns that these companies returning. But as you can just see, dividend stocks historically prove to have better long-term gains rather than non-paying dividend stocks. And also, they're usually more well-established companies with better foundations, have better balance sheets and all the good stuff, and they have the ability to perform better at sustainable rates. Like take, for example, stock like Neo went up like 2,000% in a year. But that doesn't mean it's going to go up 2,000% next year. But a stock like, let's just take, for example, Home Depot can go up 30% year over year. And if it can continue to do this, great stuff. And 30% is a very achievable, it's hard to do, it's not easy, but it's a very achievable rate to receive year over year. Now, the fifth and final reason is cash flow is king. Don't get me wrong, investing and making gains on growth stocks is incredible, I invest in growth stocks. I do have a select few growth stocks that I own that do not pay any dividend. And as we talked about earlier, this is because I'm a younger investor and it kind of fits into my timeline, my time horizon for investing. And if it didn't fit into my time horizon, I would be focusing more on high yield dividend stocks. But cash flow is king, and I just prefer to have cash flow coming in rather than the hopes of hitting a one-time big gain in the market. Now, I used to trade options, I used to do all that good stuff, and don't get me wrong, like, I did profit net, but it was just way more work. I didn't like sitting in front of the screen, and you can have a one-time gain. Like, I remember buying an option, it was like a $350 contract, and I sold it for like $900, and I was like, wow, like an intraday trade, and I got hooked. But it doesn't hook me as much as cash flow does, and I know it sounds crazy, but it's the utility that I get, the less work from cash flow and different things like that, just building it over time. It's more sustainable, because if day trading was really that easy, if it was really that sustainable, everybody would be doing it. And the wealthy out there are investing their money in cash flow stocks, stocks that are sustainable, can provide great returns over a long period of time. Okay, now just check out this article I was reading earlier today. There are generally two ways to become financially independent. The first commonly accepted idea is to have enough liquid assets that you won't spend in your lifetime. Basically, just having enough cash to survive and hope you won't burn out by spending it out too much quickly. The second, and the much better idea, is to have more passive income than your expenses. In other words, to have enough positive cash flow that you can sustain indefinitely. Take, for example, dividend stocks. The key term here is I'm not saying your paycheck is more than your expenses. I'm talking about cash flow from businesses, passive investments that are actually helping you have time freedom and be financially free. Cash flow is king. It's a very specific kind of income that can set you free. Have your dividend income pay for your expenses, whatever it might be, even rental income, okay? However it might be that you're making cash flow is king, and dividend stocks can provide that. But everybody, that is what I have for you in this video. So if you did enjoy it, make sure you give the video a thumbs up and you subscribe. You turn on those post notifications for videos coming out every other day. I just want to give a huge thank you to the channel, to all the subscribers and everybody else. You guys have done incredible, like, supporting the channel. I haven't even had this channel for 2 months yet, and we're already at 1.1k subscribers. This video did absolutely insane, 9.2 thousand views. The channel's actually monetized now, and just thank you so much for all the support you guys have given me. It's incredible. I'm so grateful for every single one of you. Just wanted to say thank you so much for the opportunity you guys have presented among me, and I'm going to continue to make videos, hopefully for years to come. I'm actually about to do a portfolio reveal showing you guys how much I have invested in my M1 portfolios. I'll even show you my growth stocks and all that good stuff, so make sure you stay tuned for that. Thanks for making it to the end of the video. Leave a comment, maybe why you have some other reasons on why you chose to be a dividend stock investor or whatever it might be. Thank you so much again, and I will see you at the next video.